Hello guys, back again to this video. So basically we are looking at different charts. Let's see which index you can take. uh, let's go for V75. V75 is probably one of the most volatile pairs, therefore when entering on V75 you have to use proper risk management. As you can see, so guys, right now we are on our V75 chart, but this one is the daily time frame. As you can see, 24 hours here. We need to adjust it to 1 hour, to the 1 hour time frame. And let's check out for the most important patterns that are forming on the charts. As you can see, but our zoom level is not correct. Basically what you have to do, I need to go through a lot of processes, through a lot of charts. Let's start with what you are seeing here. As you can see, let me do this. Are you seeing something like this, guys? Let me do this. Let me put a horizontal ray. You can see this bottom, guys. You can see this bottom. Let me highlight it with the horizontal ray. Yes, you can see this bottom. This was a good double bottom, and it had two confirmations. It was a double bottom. Then the second bottom was also in form of a rounding bottom. What we say when you say a rounding bottom, let me zoom in so that you can actually see it's a rounding. As you can see here, it's a rounding. It's different from the first one, which was just like this. It was a V. Then this one is a rounding. It's like a U-shaped. We call it a rounding bottom. And a rounding bottom is what has strong confirmations, strong entries. Therefore, for early entries, all you have to do is let me just do this, guys. You don't enter immediately after the formation of the rounding bottom. You have to wait for break of this peak here. We call it our neckline, the highest point between these bottoms and this one. So what we're going to do is we're going to wait for a break of structure above this point, as you can see, and applying the Fibonacci ratios, guys. I don't want to waste your time. I'm going to highlight this point. I need you to look closely. This point is point A and this point is point B. So what we do is we put our Fibonacci ratios and we touch this point A and stretch it until we touch point B, and some certain ratios are going to be applied to our charts. So let's do that. Let me find the Fibonacci retracement. As you can see, so I'm going to start from this, as I called it point A, and I'm going to stretch to point B. This one is point B, this one is point A. So let me start. As you can see, I have stretched. Let me stretch it equally. Yes, I'm done, guys. So you can see there are certain ratios that were applied to our charts, and one of the most important ratios is this 0.618. Then all these ratios are important, all these ratios above. So we are going to put some lines to highlight those ratios, some horizontal rays. These are the easiest horizontal rays, as you can see. I'm going to put another one here, then I'm going to put another one here. So as you can see, guys, what has happened is we've applied all the ratios. So basically these ratios, they represent minor areas of resistance and minor areas of support. So whenever you see a break above this structure, your minimum take profit zone is going to be the first ratio to be approached. So as you can see, our market approached the first ratio, and see what happened. It broke above that first ratio, then it came, it made a retest here. You saw this strong bullish and engulfing candle just at this one. You were going to add more entries, more buy positions, and again your take profit again was going to be marked with the second ratio that you're going to see in your movement. As you can see, this was the other ratio. So this was my second TP, and my market came, it hit my second TP, and it started running down, as you can see. So I have taken my profits. Then again it broke. I did not remove these areas, and I can highlight again with this zone. Let me highlight this one. As you can see, this is a major zone of resistance here that I have highlighted from basing with this level, as you can see. So what is happening is our market has broke. Our market came and again it broke this resistance level, and we haven't seen anything yet, but it came and it retested this zone, this Fibonacci retracement zone, and it was leaving weak rejections, as you can see. So it was a confirmation for another buy. As long as you see these weak rejections and this Fibonacci retracement ratio, as you can see, because these Fibonacci retracement ratios, they show the most important areas of reversals in our market. So as you can see, our market was coming for a retest. It left weak rejections just nearer to this zone, so I was going to add more buy entries again, and as you can see, my TP again was going to be the other Fibonacci retracement ratio, as you can see. So this was my TP, the Fibonacci retracement ratio. It broke again, as you can see. After breaking, it came for a retest, and my minimum TP again was going to be this Fibonacci retracement. As you can see, it came, it respected the Fibonacci retracement, and as you can see, after finishing the whole wave, the market had to go down, as you can see, guys. So what I need to tell you is whenever you see your market at the upper peak like this one, like this zone, because this one is the last ratio that has been applied to your chart. Therefore, there are high possibilities of a true and a very aggressive reversal whenever the market reaches that zone. And as you can see, our market came, it just tested with some weak rejections, then there was an aggressive reversal. As you can see, it came. Whenever you see it reversing again, your first TP is going to be this zone. Then after breaking again, you saw my second TP was going to be this zone. Then there, what happened, guys, as you can see, my market broke. It came for a retest, but it didn't respect. Whenever we are now going with sorry guys, I need to explain something. Whenever we are now going with the opposite trend, it's now a downtrend. Therefore, these ratios will not be working as strong as we applied them before, because they were dealing with a bullish sentiment. So right now we are dealing with a bearish sentiment, and right now, according to our chart, there's no much analysis that we can make, and I need to go back and find another sweet chart. As you can see here, guys, I've come across another chart, and what I'm seeing here is basically a head and shoulder. Using the head and shoulder strategy, my guy, one secret I need to tell you is you have to draw the neckline first without doing anything. And one most important thing when using the head and shoulder pattern, the head and shoulder pattern might form here on the lowest points. Never use that head and shoulder. A valid head and shoulder should be formed after an extended move to the upper side. As you can see, this one, there was an extended move. Let me highlight the extended move to the upper side. As you can see, this was the extended move to the upper side. As you can see, I'm not drawing this trend line for accuracy. I'm just highlighting the extended move. As you can see, this was the extended move to the upper side. So what happened, guys, is whenever we see this this type of thing, we call it an extended move on our head and shoulder pattern. Let me draw another trend line. It's forming a channel. I'm using the touchpad, so I might not be accurate in drawing. My mouse is just misbehaving. So what we have done, guys, we have drawn this zone, this phase, we call it the extended move to the upper side, and this one is the extension. As you can see, the extension to the upper side. So this was one confirmation that it was a valid head and shoulder pattern. So the next thing that we are going to do is to draw the neckline. Whenever we are dealing with the head and shoulder pattern, we should never forget to draw the neckline. So let me highlight the neckline Let me do this. You see, my Chrome is not responding. I don't know what is happening, guys. Can you bear with me? Yeah, it's now responding. Oh, let me do this, guys. I need to draw the neckline with a horizontal ray, as you can see. Yes, I've applied my neckline, as you can see. Guys, one thing that I need to tell you, some people they say, yeah, when drawing this neckline you should connect the body of the candles. No, connect to the wick rejections, because the wick rejections, these are the wick rejections. If someone doesn't know wick rejections, these long tails, you call them the wick rejections. So whenever you are drawing this neckline, connect the wick rejections, because they show some zones where the market is previously attacked, and there's possibilities of attacking that zone again. So we have drawn our neckline, as you can see here. And what is the second thing that we need to do is we have to highlight our shoulders. As you can see, this is the right shoulder, and this one is the what is the left shoulder. And there are two confirmations that we use, guys. Some people they didn't know, but I need to explain them all to you, and I need to highlight how to use them. As you can see, one thing you need to do is you have to know your loss target and your profit target. So firstly, we are going to be talking about the loss target, how to put the stop loss, how to implement the stop loss, and how to make your entries. Number one is entry. So let's talk about entry first. So our entry is made whenever the market breaks this trend line. Whenever the market breaks this trend line, we make our first entry. Guys, are you hearing me well? Whenever our market breaks this, we make our first entry. Sometimes we wait for a retest, but sometimes if we see that the candle that broke, it closed with a high bearish momentum, if it is a downtrend, we enter our trade confidently. As you can see, all the candles they closed bearish without leaving weak rejections, so it was a clear entry. And as you can see, there was no minor area of support here that was going to disturb my entry, so I was going to enter here. And where I put my minimum loss target, for smart riskers, what they have to do, guys, for smart riskers, they do this. They put their stop loss at this zone. Let me highlight. Smart riskers, hear me well. This stop loss I have highlighted here is for smart riskers. Then for those swing traders who need to hold their trades even for weeks, even for days, you can put your stop loss just above the shoulders, as you can see. So as you can see, there are two types of traders. This one is a smart risker, and this one is high risker. We are not talking about high risk in terms of profitability. No, we are talking about in terms of stops, as you can see, because this one is easily hit, but with a small loss. Then this one might not be hit easily, but when it is hit, it's got a bigger loss aggressively. You see. So the one I recommend is this one. You just put it above the neckline, and the risk to reward ratio will be good. And how do we mark our take profits, guys? It's simple, guys. There's one thing that you need to know when we're marking our take profits. We need to implement the Fibonacci golden ratios. So as I told you, don't forget to use the Fibonacci ratios, guys. Let me apply again. As I told you, so we are going in a downtrend. When you are going in a downtrend, we stretch our Fibonacci from the lowest level to the highest level, and our lowest level is the range in the shoulders, and this one is our lowest level in the shoulders, and this one is the highest level of the shoulders. As you can see, lowest level of the shoulders, highest level of the shoulders. As you can see, are you seeing it closely, guys? So I'm going to stretch from this lowest level to the highest level of the shoulders. As you can see, stretched. Yes, I've stretched. Let me extend again. Yes, I need to make it more clearly. So as you can see, and some ratios have been applied, and I'm going to take these ratios as some of my take profit zones. But also there's another confirmation that we need to apply when marking our take profits target. We need to mark the height of the head, and we call it our objective measure. Let me do this. I want to measure the height of the head. I will call it my objective, my measured objective, as you can see. Simple. Basically this is the height, as you can see. Let me make it more accurate. As you can see, this is the height of my head. So what is the use of this height? It's simple, guys. What you have to do is you have to project it from the break point. And when I'm saying the break point, I'm saying the point where the price broke the neckline. As you can see, my price broke the neckline at this zone. So I'm going to extend to project this and put it where my price broke this zone. So let me project it. Yes, I've marked everything, guys. As you can see, this is where my price broke and I've projected, and my maximum profit target from this strategy will be the lowest peak of that projection. Let me highlight it with the horizontal ray. Yes, horizontal ray, not horizontal line. So I want to highlight it here. As you can see, I've projected it and I have highlighted it. So this one was my maximum. As you can see, this was my maximum take profit zone. So let's see what the market would have done. So as you can see, guys, initially your analysis should look like this before you know whatever is going to happen in the markets. And these levels will be your minor take profit zones, like TP1 here, TP2 here, TP3. But note that whenever these are extending beyond your major objective, beyond that height of the head, don't take them. Like this one, I think is out of the head. My head, the height of the head was reaching somewhere like here. So this is going to be my maximum take profit zone. And as you can see, there are some support level here, which are supporting my analysis. So let's see what was going to happen. As you can see, these binary implementations, they don't have a playback, so I'm going to be using this simple method that I'm just using. As you can see, so this was going to happen in our markets. As you can see, you're in your trades, you're taking your trades, my guys, but check out where your maximum take profit zone is. As you can see, so you see what happened, guys. Finally your market, it hit your maximum take profit zone. As you can see here, it hit it, and you are deeper you collect your profits, my guys. This strategy is powerful. You collect your profits. This was my maximum take profit zone, and as you can see on my TP1, you see it broke TP1. As I told you, this ratio can act as TP1. Let me highlight it with the horizontal ray so that you can see it clearly. You can think this guy is using his tricks, no? You can see what happened here. It broke the first ratio, which was my TP1, and it came for a retest to that TP1 before it continued moving downwards. And one thing I need to tell you, this one is not a head and shoulder pattern. This one is never a head and shoulder pattern. Don't take it as a valid head and shoulder pattern. This minor thing that we are seeing here, because one of the rules that I said is a head and shoulder pattern should form after an extended move to the upper side. So, but as you can see, guys, we milked the markets here. Our TP was here, the strategy was powerful. As you can see, the market continued going down. As you can see, it continued going down, coming to this, respecting the other Fibonacci ratios. Then again, see what was going to happen. You can see the other ratios being respected. As you can see, guys, We have explained before about this double bottom, which is complementing also the rounding bottom. These two, they are very, very, very powerful. But we ended just above the neckline, break of the neckline. So as you can see, guys, right now we are on our current chart, but we have analyzed the possibilities of what might happen in the markets and the powerful strategies that we use. So one thing that you need to know when drawing the support and resistance levels, guys, I think I have highlighted. I want to tell you one thing about support and resistance. Let me do this. We need to find a good zone. Let's do this. We need to find a good zone. If we don't find something useful here, we are going to go and find it like on other indices. I'm trying to find somewhere where you can draw a good horizontal support and resistance, but I can see here there's no clear movement. So what I'm going to do is we need to go to let's find something like viewers. But basically we finished what we wanted to talk about the symbol strategies. Let's go to volatility 50. So guys, right here we are on volatility 50, and as you can see, so generally what I'm seeing here, guys, is a head and shoulder pattern that is not healthier, but there was a big extension, a big extended move to the upper side and the formation of a shoulder, and the other right shoulder was supposed to form a good peak, but it is in form of a range. And let's highlight this range. Let's highlight the range. As you can see, you can't draw a range when you don't know support and resistance, guys. So I told you it's very good to know support and resistance and how to draw the support and resistance, because there's nothing that you can do when you don't know support and resistance. Let me highlight it with here. So guys, as you can see, our market is ranging here, and after this ranging, there's another this. Let's connect the bottom of the shoulders. As you can see, this one is our left shoulder, this one is our right shoulder. But one thing that I told you, why I said this thing is not healthy, when connecting these shoulders, as you can see, there's something that I didn't like. There's something that I didn't like. Yeah, I have connected. And the thing that I said I didn't like is about the condition of the neckline. The neckline should not be slanting, as you can see. It should not be slanting downsides. It should not, it should not have a negative gradient. For those who do mathematics, this neckline is having a negative gradient, which is one of the things that I hate most. Whenever you're drawing the neckline, it should have a positive gradient, like it should be going upwards. This neckline is going downwards, and it's not good for the selling pressure, because the market, it shows the market has already been selling and might be experiencing exhaustion phase. Therefore, we don't need it. So you see, this is one of the things that we call a bad setup. Whenever you are in the market, you have to be patient. You have to wait for good setups. You can see what is happening here. So here you cannot implement it as the head and shoulder pattern. You can even just use it as the trend line. And when applying it as the trend line, you are waiting for the market to come here. You are now applying it as a trend line. Therefore, you are not waiting for a retest of the head and shoulder neckline. we are now going into a trend line. So what I'm going to wait for is a bounce at this one, as you can see. Then our market continues in the downward movement, as you can see. This is what we are expecting, but this one is not a good setup. This is one of the pet setup I need to show you guys. So whenever you are dealing with the markets, be patient. If you don't see a clear and good setup, you have to wait for the market to form up good patterns. So there I was not going to take any trade, but I was just going to test my skill, like just testing on a demo, because you might see it like a powerful thing, but yet your strategy tells you that thing is bad. So you have to test it on a demo, but this thing basically is not good. It's not a good setup. Let's find another index to deal with. Like, let's go to volatility 10. Like, I killed volatility 10 last night. I made something like $500, and it was a good sell entry yesterday. It rallied all the way. I killed this thing, as you can see, this rally. And how did I kill that rally? Some people might ask, this is what I did. Previously, what happened is our market made an extension, and after making an extension, let me highlight. I don't want to say without highlighting for some people that don't understand. This was an extension. I told you what is an extension. It's either an extended move to the downside or an extended move to the upper side. But as you can see, this was our extension. I'm not drawing this extension for accuracy, but I'm just highlighting it. So as you can see, this was our extension, and after our extension, you can see there was a head and shoulder pattern here, and there was a positive gradient. As you can see, guys, I told you about positive gradient. I guess I told you. Yeah, I told you that our neckline should have positive gradient, or at least 180 degrees in a straight horizontal line. So guys, you will basically finish the setup later. Let me I want to do something. I've been disturbed, sorry. We will continue.